In the realm of investments and capital markets, you might have heard the term IPO being thrown around quite a bit. But what does it mean? How does it work? Well, stick around because today we're embarking on a journey to unravel the intriguing world of initial public offerings, or IPOs. An initial public offering, or IPO, is the process by which a private company can go public by selling its stocks to the general public. It's like a debutante ball for companies, marking their entrance into the public marketplace. A company might decide to go public for several reasons, perhaps to raise capital for expansion, to pay off debt, or even to increase the company's prestige and visibility. Now let's break down the process of an IPO into 5 digestible steps. The first step in the journey of an IPO is the decision to go public. This is an important strategic decision made by the company's board of directors. They weigh the benefits, such as access to more capital against the drawbacks, like increased regulatory scrutiny and pressure to deliver quarterly results to shareholders. Step 2 is the selection of an investment bank. The company will typically choose one or more investment banks to act as underwriters for the IPO. These underwriters play a crucial role in determining the initial offer price of the stock, handling the IPO process, and selling the shares to the public. Step 3 involves due diligence and regulatory filings. The underwriters, along with the company, prepare a registration statement to file with the Securities and Exchange Commission. This document contains detailed information about the company, its finances, and its plans for the raised capital. Step 4 is the pricing of the IPO. Once the SEC approves the registration, the underwriters will set the offer price based on factors like the company's financial condition, market conditions, and the level of investor interest. Finally, step 5 is the offering and sale of the stock to the public. On the day of the IPO, the shares start trading on the stock exchange, and the public can buy the shares at the offer price. Now, to summarize what we've discussed, an IPO, or initial public offering, is the process by which a private company goes public. The journey of an IPO involves 5 key steps: making the decision to go public, selecting an underwriter, due diligence and regulatory filings, pricing the IPO, and finally, offering the stock to the public. Each step is crucial in ensuring the success of an IPO and requires careful planning and execution. So, there you have it, a primer on initial public offerings. Remember, while IPOs can be exciting, they also come with their fair share of risks. Always conduct your due diligence before diving into the world of investing. Join us again next time as we continue to explore the fascinating world of finance and investment. Until then, stay curious, stay informed.